Hello traders, it's 8:02 a.m. Chicago time on December 1st, 2020. Welcome to December, the last month of the year. It is Tuesday. This is episode number 1889. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the summary sheet shows risk on, pretty solid risk on today. We have allocation to risk, so the indices are higher this morning. The Eurozone indices not as strong as the U.S. indices. Money's moving out of treasuries, including in the Eurozone. And into metals and risk assets. The dollar's a little bit off, the euro's a little bit stronger, and so on. You see it in front of you. Today, in terms of economic events, we're looking for continued back and forth on U.S. stimulus. There were some comments by the current Senate Majority Leader McConnell, that there should be no reason for a stimulus package not to be passed. There's also around $450 billion or so in prior allocated money that is sitting with the Secretary of the Treasury that is looking to go to work. That news hit yesterday, and the market responded accordingly. As far as scheduled releases, market manufacturing PMI at 9:45 Eastern, ISM manufacturing at 10, construction spending at 10, and then we have Fed's chair's testimony at 10:30, ECB's Lagarde and Fed's Brainerd, Daly, and Evans at noon Eastern. In terms of earnings, actually, one of them is missing here. Let's see why that is. But I believe, in fact, I know that HP stock earnings. HP announces today, United States, and I thought HP announced after the close today. Maybe my information is not correct. Yeah, I thought HP announced today they're expecting 34 cents. The overnight inventory we're looking at, or the overnight status, we're looking at about 217,000 when this was printed. Currently 228,000 contracts in the ES versus 316 as the limit of the norm. The range is 38.5 points versus 52 on the limit of the norm, and then on the overnight inventory is 89.5% long. Market condition is trend up, pretty solid P-shaped profile overnight. And the market continues to squeeze to the 36.68 high from Pfizer, overnight high from Pfizer. That is the highest print in the S&P ever. And we're approaching it with an overnight high of 36.6450 currently. So that's where we stand. Again, risk on sentiment coming into today. If you want to get this summary sheet, all you have to do is follow Conv Trading or Convergent Trading on Twitter. You can find it at twitter.com, just as it shows here, twitter.com/Conv Trading, and it'll show up on your feed at about 7:50 Central, 8:50 Eastern. Let's take a look at what was expected yesterday versus what we got. Yesterday's expectations really did not materialize very well. The primary expectation, given the way the stance of the market, the primary expectation is a sideways open. We were around the overnight point of control, expected a sideways open for a little bit of consolidation, for a push through the high of 35, a push to 38. and then a test of 42, last week's high or Friday's high. Did not That did not occur. In the secondary was a test higher that basically gets sold. I was looking for an impulse down. If we did get an impulse down, I'm going to be looking for a short somewhere around the overnight point of control and look to ride it down into the 16 quarter at least from about 28. What it did though, it actually pushed a lot farther down. If we look at the action overnight, you can see that there was a small wiggle here to give us the opening swing, and then it immediately started to sell off. Pull back to mid and VWAP, and then continues to sell off again, a poke through mid and VWAP, and then finally it gives in and starts to sell off. The sell-off occurred right through the initial bounce. The initial bounce low was not clearly defined. But overall, it gave us an opportunity back here. I was long into this initial bounce on the higher low. I think down the higher low down here, long from somewhere in here. I don't remember. I posted it in the Convergent Trading Head Trader channel. The initial balance held. By the way, there was confluence here. We had the initial balance, this yellow line, which is the low of the first hour. The mid, which is the range high plus range low divided by 2. It's the 50% line of the session. It is a kind of rule of thumb gauge as to which side is dominant at that point. It's a rough estimate. So below mid, testing the mid, and then VWAP to back it up. And then it rotated down. Actually, it was this low, this higher low that led to a long from here. Rotated down, higher low, pushes back up, and then it squeezes back in, was looking for 36.11 on the retest. And then from there, it's pretty much sideways. If you look at the profile, really active price discovery right into the value range here. This value is valid, but it's a bit of a boxy kind of profile. We traded a lot in this middle range. Lifting did not come in to play until really later in the session. True lifting occurred right near the close, right into the close, when we finally saw buyers coming in. With it being at the end of the month, it was expected that the market was likely to run one way or another. In my opinion, this entire day behaved like rebalance, end-of-month rebalance. Longs were balancing inventory or balancing risk in the morning, and then those who missed out are buying into the close into the next month. It traded like it was a window dressing day, and the profile kind of shows it. We did have activity throughout the range. This IB played a pretty decent role throughout the day. You could see it here, and of course, it's something I've been tracking since I got into market profile in 2005. It's just something that's important for me to gauge the action with. Yesterday was actually a neutral day. We ended up taking out the initial balance high at 31.50 by 4 ticks, but much of the profile was below the IB. We did have a point of control inside of the initial balance, giving us a normal neutral day to contend with. What this means is that the market has tested to the downside, and finished up higher. But if you note, the market basically finished right where it opened. The opening print was 28.5, and we closed at 28.75. So we closed a tick higher where we opened after having tested approximately 30 points or 40 points down, basically. So what this looks like is a rejection of prices below. You can see it in the market profile here. Rejection of prices below 3,600 right in here. This is it's a small excess, but on the daily actually is where it shows it a little bit better. Let me pull that up. If we look at the daily bar, you can see that it was a what do you call this? A spinning top or something like that. So we opened here, we closed here, and we tested all the way through with 3,600 being right here. Every test of 3,600 this past week was bought back, and yesterday was no different. To me, it is no surprise that we are higher. This is a clear excess on the daily. It tested down and it wasn't able to hold those prices. Those prices were considered unfair by the end of the session, and so the next auction rotation is likely to be higher, 42.75, and a continuation to the all-time high of 36.68 was expected. The overnight high is 36.64. Pretty good range yesterday. Look at that, and pretty good volume. It's end of month volume with an okay delta. Delta's been dropping, has not recovered from the last high. Notice where the last high, the delta was up here, and in this where we are now, the delta's way down here at approximately the same kind of price range. It's typical of the market to make a second run. Make a second run on a oh, that's distracting. I thought I turned that off. I appreciate Max Schutte. Appreciate that, but I'm going to have to figure out how I can get this money to charity, to be honest with you. I don't know how to turn that off, and I thought I had someone work on that. Appreciate it. In any case, this is just a feature within YouTube where people can contribute, but I really am not asking for a contribution, and I appreciate it anyway. So what are we looking at for today? For today, we have a P-shaped profile. P-shaped profile. It's considered short covering. We have simply squeezed higher, risk on. We've maintained above the mid. We've maintained above VWAP so far, and we've held near highs. We do have a weakish high, and the all-time highs right up here, 36.68. I do have a big stock zone up here, and there's quite a bit of liquidity up here as well. There's a fair amount of liquidity up here in the order book, and I'll show you that in a minute. But overall, this is really as we said, the overnight inventory is 89.5% long, and it's sitting sideways on the overnight point of control. So what we're looking at is an open that is going to be out of range. Most likely, given its position, it is very likely to be an open auction out of range, and I'm expecting some response to rebalance that inventory. I'm looking for some response to the downside, and it's got a ways to go to yesterday's high. So yesterday's high being 32.50. So there's a lot of room to the downside here, but to me, we're squeezing all-time highs. This is going to be the highest open we've ever had in this product. I'm going to sit back. This is kind of new territory. Very little in terms of reference up here. If I scroll back to that Pfizer news, look at this profile. There's very little here in terms of reference as to how it auctions. So in in the way that it's set up right now, I would look for it to respond a little bit, but I do not expect this gap to hold. I expect it to maybe retest that low it put in it during the European session. This low is 36.46. 45 and a quarter is the mid. Maybe it'll come down here, but I'm going to be watching carefully to get long because the expectation is a gap and go, and the target is 36.68 on the long side. That's how things are shaping up. Note the delta, the overnight. The overnight delta is really back almost to even the highest peak at 40.46, and it's coming right back. It looks like it is a lot of the positive delta is being chewed out or being consumed here, and it's coming back into balance right on top of the overnight point of control. So tricky open. I would expect it to wiggle here at the open. I would expect an open auction. It is likely to be relatively quiet. I would expect a small response, but then I'm looking for this gap to hold and for this weak high to be tested into the 36.68 push, and then it takes us into open field, an open field of prices above. There's no profile above, and the next area up I've got nothing up here until 36.99.50 all the way to 3700. So that's 30 points above the high, 32 points above the all-time high. So that's what we're looking at. Let's take a quick look at CT Bookmap here to see what the liquidity picture looks like. As I said, there's liquidity resting up here at the 36.65. What is up with the blue? Let's make it white. Sorry, it's choking up. 36.65, there was some liquidity here. Here's the top. You could see that top was not really a rejected top. This would be an excess high right here. That's what an excess high would look like. This is not an excess high. This is a top that was rounded and it took a while to build. If it comes back up here, then this liquidity becomes a key target. Above here, to look at the full depth, the next big area is, of course, right above the all-time high. The all-time high is right here, 36.68. The next liquidity area is just above there at the 36.70 strike. Below us, not much to speak of, all the way through to about 38 and 32. There's not much to speak of. Really, the predominant liquidity is available right up in here. To me that appears to be a magnet, so I'm looking for it to turn down and then walk itself back up. And it's built quite a hump here. You can see the overnight point of control has a decent amount of energy in it. Nothing outstanding. The volume overnight still 236,000. Nothing much more than that, but still today is a special day in that we are squeezing highs. Let's take a look at what's expected for today's session. So for today's session, let's turn on our master levels. Okay. For today's session, come on. For today's session, we are right on top of the overnight point of control. Open auction, looking for it to squeeze down. We do have the secondary area here, squeeze down. And then I'm looking for some impulse at some point to the upside as buyers are found. Consolidate back at the overnight point of control and then push the 64 high into 68 and a potential squeeze up through the all-time high and then coming off to rebalance on the close. That's the primary scenario. That's with the trend. Secondary, an open auction that immediately pushes the high, squeezes into the liquidity, uh, gets to the liquidity above, gets to the high, consolidates up here, puts in a rounded top, comes back in, consolidates, and holds steady over the overnight high. Since we're out of balance, there is a third scenario. There are always five, but I'll explicitly state that the last scenario. The last scenario is an open test up, drive down. I expect it to push back into the 51, 52, and then squeeze into 45, and then start working its way back to towards the 37. I do expect the gap to remain open here, even in that scenario. The gap distance has a low probability of getting filled, and that's scenario 3. Scenario 3 is rebalancing and consolidating at a higher price before pushing the high. So that's what we're looking at for the three scenarios. So we're going to, as the market opens, we're going to need to pay attention and watch to see how the auction progresses. Is it pushing higher easily, or is it struggling? Good luck today, and I'll catch you tomorrow morning. Take care.